Well, it's been a Dickens of a year so far in the market in 2016. Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 25th. And I say a Dickens of a year because it's been the worst of times, the worst start to the market that anybody can remember in a long time. You remember from mid-December down through January into February, we had a really market decline, and we've had this remarkable 7-week rally in what we believe is still a bear market, but still a very remarkable rally from the middle of February now into the late part of April. I wish I was clever enough to come up with that reference, a Dickens of a year, worst of times, best of times myself. I saw it in a Barron's article, but it seemed appropriate. And now we're at this critical point. Over the last few weeks, I had said if we went up through this 2083 level on the S&P 500, that would be kind of a warning sign that maybe the bear market was not underway, and it could go, this rally could continue. It blew through that 2083 level. The next level we're watching here is 2116, which would take out this previous high from last autumn. And if we do take out that high of 2116, if we close above that, then there's a good chance we could go put in new all-time highs. This dashed green line at the top here at 2135 is the all-time high for the S&P 500 from last May. But I don't think that's going to happen. We reversed pretty sharply down the last couple days in the market. And this is the S&P 500. Let's look over at the NASDAQ real quick and see what's going on there. So on the NASDAQ, you can see we did not even come close to approaching the highs from late last year, and it's turned down pretty markedly, and it was down pretty sharply on Friday. And there were some big name stocks that took big hits on Friday. Let's look at just a couple of those. So here is Alphabet, the parent company for Google, down 5.39% on Friday. You see this big gap right here. So that's one. Here is Microsoft, MSFT, big gap down on Friday as well, down 6.9%. Starbucks, gap down 4.96%. And we were pretty happy about that because in our stock picking service we are short Starbucks, and so that worked in our favor. And then finally here's Visa, symbol V. It gapped down, not quite as much, but still significant, over 2% gap down on Friday. So now we're back looking at the S&P 500 chart, and it's had a couple down days. We've had those before in this rally, but after a 7-week rally with some big names taking a hit, there's a really good case that this will correct down probably this week. It'll probably get started this week. We'll have to wait for that reality to play out. Nobody knows for sure, but I think there's a really strong likelihood of that. Now, maybe the bigger question is it just going to be a small move down before we go on and make new highs, or is this the beginning of another one of these moves down like we saw late last year or last summer? And I think the probability is that, again, we are still in a bear market. We've got this larger pattern of lower lows, lower highs, lower lows, lower highs so far. And then we could go on and put in new lows, go take out this low here. And I still think that's the probability, and we'll see how it gets underway this week and if we put in some significant lows here. But we'll have to keep watching, and I'll keep providing updates. So let's take a look at gold and oil like we always do. So gold has been in a pretty significant rally most of the year, and we had said back if it crossed 1113 that we thought this rally was getting underway. It certainly did. Now we could be starting what's called a wave 4. This could be this is wave 1, 2, this is 3 so far. This could be a wave 4 correction coming down into this area here with a midpoint of about 1182 before it takes the next leg up. It'll be really critical to see if it takes out a couple of these key lows here. So we'll have to keep watching gold and decide whether it's in a corrective wave and then before heading up, or whether it's going to just keep going up into this wave 3. A little bit indeterminate right now on gold, so we'll have to let the realities play out as always. This is the crude oil futures contract. The recovery here is just so clearly underway. It started just the way gold did, and we had said 3709 was the key level for it to break out of to signal the start of the recovery, and it blew through 3709. It pulled back pretty sharply, but it's gone on and it's made some new highs here, and I think it will continue its correction. Now we could keep pulling back, right? This doesn't move in a straight line, and it's going to be volatile. Oil always is, but it's going to work its way up into this recovery zone of 63 to 84 over time, over through the rest of this year, maybe into next year. And again, it won't be straight up. It'll be a series of higher highs, higher lows, pretty volatile. But the highest probability is that this recovery in oil, again, had a massive downtrend from over 140 a barrel down to, $30 a barrel. And so this is a corrective wave to that massive downtrend, and it is proven that it is underway, and we're watching that really, really closely. We're trading oil-related trades right now and doing really, really well on them. So this continues. So here's something, I'll show you something new, something I'm watching very closely. This is natural gas, and so this is lagging, but it's doing the same thing that gold did. It's doing the same thing that oil did, and it just crossed this line here, 2082. And it has put in a new high. So the recovery in natural gas has started as well. We're going to be looking for some great trades on natural gas, and its recovery level from where it's at now will be up into the 3.4 to 4.4 range. So more, a chance to double from where it's at. So we're going to be watching that. We'll continue to update natural gas as well. So to recap, it looks like there's a really good chance that the S&P 500, the broad market, is going to turn down here, probably this coming week. Gold, a little uncertain. It may be correcting a little bit before it heads back up. Oil recovery underway, and natural gas recovery absolutely starting. High probabilities. Nothing's certain, nothing's guaranteed in the markets, of course, but these are all very highly probable. Let's take a look real quick at the economic reports coming out this week. It's a little bit of a busy week. Got some good stuff coming up. Here, if we look at the Monday the 25th, so Monday, new home sales, Tuesday, durable goods, Wednesday's a big day, international trade in goods, the petroleum status report, and then 2 o'clock Eastern time. The big deal is the FOMC meeting announcement. So that will move the markets pretty significantly. And then the rest of the week, GDP, jobless claims, personal income. So pretty busy week, and again with the big deal being on Wednesday. So I have to watch all that and see how the market responds. Again, we trade the realities of what's actually going on. Some of my comments are speculative about what I think is going to happen. What we actually act on is what the market's doing, the reality of the charts, and that's worked well for us for years. We're profitable so far this year. So that's it. Thanks, and be sure and stay tuned. It's going to be really, really interesting, and we'll give our update next week. Take care.